Hey, everybody, this is Charles Dobbins, and this is my podcast, the Multifamily Investing Academy's podcast. And I am here with a gentleman I met at a conference I was at down in Florida. And his name is DJ Scholl. And I got two things I want to talk to DJ Scholl about today. DJ, did you know, I just have to say that you are on an award-winning podcast, American Apartment Owners Association 2022 Podcast of the Year? Huh?
I've heard that. I've heard that. Congratulations.
Thank you very much.
Very busy.
Yeah. Now, where are you? Are you up in Maine right now?
No, I live on the Cape.
Oh, that's right. That's right. The property that I want to talk to you about was in Maine.
Oh, sure.
Yeah, that's what was getting me confused. Okay. So, DJ, I met you at the Distressed Assets Loan Workout Officers Conference. I'm there trying to learn new angles on how to find deals and what have you. And you and I got talking. And, I liked a couple of things you said, and I just really wanted to get you on my podcast to pick your brain. When we first got started, you told me about a deal that you had up in Maine that actually worked. My client was very happy that I gave you his name and number. I don't know if anything came of it, but that was a deal that you bought. Like, how did you find that deal? It had something to do with bankruptcy court or?
Not that particular deal. That particular transaction was actually referred to me by one of my better customers over the years, who happened to be extended on other projects, and he suggested that I step into his findings, so to speak, of this prospective transaction, and run with it. And
okay.
Looked at it.
Yeah, go ahead. I'm sorry.
I looked at it and I decided to do that specifically. And as I said to you, what it was, I'm sorry, it was a church.
Yeah.
And what was interesting about it was that it was a cell tower in this. So that's where I saw the opportunity, and ran with it from that point on.
Okay, now I gotta tell you, if I got that opportunity, one of the things I would have thought about was, how can I keep the tower but sell the real estate? Or like, did you structure it that way, or how did you what are you doing with that deal?
Well, I've already done half of it. Now I've got the other half, just since we spoke. But basically, so what I had a vacant building. It one time was a church. Since the 1800s. It was a large building. It's about 9,000 square foot gross, 2 usable floors, each about 3,000 square feet.
Wow.
It's a big church, 1884 it was built, center, that kind of thing. Small town in Maine. So anyway, there was a vacant church up there, and we found out that there was a cell tower in the steeple, and that the parties that owned the church had owned it for 10 years, and it sat vacant there for 10 years because it was owned by a large corporation who I can't name, but it was owned by a corporation. So in their infinite wisdom, they were going to make it into a meeting room. And the church actually abutted a parking lot that they owned. So the corporation figured that they were going to, get some meeting room space at the other side of the parking lot. So they bought the church, they gutted the church empty. And then, as corporations sometimes do, they changed their mind and said, we're not going to do this project. Let's sell it. So it had been vacant 10 years. It had been on the market for about a year and a half, maybe even 2 years, when I got involved. Everybody before me had looked at the building. They were builders, they were developers. They were saying, hey, we could convert this to condos. We could do commercial here, but they didn't buy it. They had a couple offers. The corporation would not budge. So anyway, I came along and I recognized that the cell tower, the use of the cell tower, that's basically a lease.
Right.
It's a lease. So
You're buying the cash flow.
it's an income stream
Yeah.
from a reliable, quote, Verizon, T-Mobile, it's from.
Yeah.
And that's better than, a borrower or any homeowner or any corporation, in my opinion, to deal with a big company like that. So I knew that lease had a value. So I basically made an offer on the property for a little bit less than they were asking. They agreed to it. But like so many corporations, they weren't really prepared to sell it from a documentation standpoint. They didn't have all of their ducks in a row. I went back to them and I said, well, as part of my offer, I needed some parking spaces. So what I did was I told them I need 80 of your parking spaces, of which you'll include 4 in the sale. In my price, I've included 4, and then you'll give me an option on 4 more spaces anytime to be exercised in the next 4 years at an agreed upon price of X number of dollars per space.
Yeah.
The short story is it took a year before the hospital was able to give me the documentation, the paperwork, and not so much the paperwork, although that was a good part of it, but also just to get the board of directors to give authority to move forward. So anyway, after sitting there working on it for a year, just waiting and waiting, we finally closed on it.
A year.
During that year, I was getting a little bit nervous. Now, I closed out on it November 30th of 2022. So what is that? That's 4 months ago.
4 months ago, yeah.
Right? So during that year, the prime rate was going up. So I was just concerned not for my money. I was concerned about selling the lease, and if the increase in interest rates was going to lower the amount of cash that my buyer would pay for that lease, right?
Yeah.
Hey, except low yields. Now everybody wants a high yield, right? Because rates have gone up. Surprisingly enough, the telecommunications industry is so hot right now, and cell tower sites are in demand, that I didn't have to worry as much as I thought about the increase in interest rates. And I was able to find a buyer with no difficulty for the cell tower lease. So basically, about a couple of weeks ago, I sold the cell tower lease.
That's what I was wondering. Yeah.
Right. And,
good for you. And
yeah.
how do you, obviously, let me guess, this has got to be the first cell tower you've ever sold, right?
I was actually involved in one before, about 2 weeks ago.
Okay.
Got me thinking about it, and I knew that it would work. And,
all right. So how do you value a cell tower?
Very good question. I can tell you there's a rule of thumb that most people use.
Yeah.
18 to 25 times the monthly rent.
18 to 25.
The annual rent, right.
18 to 25. Okay.
18 to 25 times the annual rent.
Okay.
And depending upon the desirability, because what happens, and I'm not a telecommunications expert or a cell phone expert. In fact, I have trouble using my cell phone.
Yeah.
But apparently the cell phone companies always are juggling for the best locations and how many towers they have in certain areas.
Yeah.
So that's what it is. I was able to get out a request for proposal to cell tower folks, and we put out 3 or 4 inquiries, and one or two of them said, gee, it's not in our, we're not interested. But the other three were very interested.
Okay.
Matter of, okay, what price do you pay? So it became down to dollars. And the other interesting thing, that you ought to recognize is that in addition to getting a payment for your cell tower, you can also negotiate a potential residual payment. Residual payment comes into play when the tower has space on it. Oh, you mean I could put, instead of just having Verizon up there, we could have T-Mobile too? Yeah, if the structure
Allows for it. Yeah.
for another tenant, so to speak, then say that tenant comes along and somebody charges, and whoever you sold the lease to charges them $1,000 a month. Well, you're going to get a piece of that new money every month.
Wow.
Yeah. And these cell tower leases go on for 50 years. They go renewable. I mean, once this is done, it's gone. I'll never see it again.
Yeah.
So then I think you have to look at the quality and the quantity of the income and the payer, which is not a Verizon or a T-Mobile, or you pick a cell phone company.
Yeah.
Now I'm in a situation where, yes, I've sold a cell tower lease, and it was a good transaction, a very lucrative transaction for me. But now I've got the physical building. I've got the fee simple interest in the building. So now I have to look at it and say, well, what can we do with this building now? It's a vacant church. Well, the logical thing is to make it into, at least in this instance, is to make it into a couple of condominiums, large condominiums, 2 or 3. And I've got adequate parking space for that. And the building is already gutted. So it's a wonderful opportunity for, like, your client up there in Maine, if he was a rehabber guy, to come in there and do some rehab work on it. I don't know if I fully got that across to him.
Yeah.
Again, I have actually not started marketing that project yet. I'm probably a couple of weeks away. And I just think it's a good opportunity for a local guy.
Yeah. Well, I'll make sure that I put your contact information in the show notes so people can reach out to you.
Sure. Yeah, it's not a big number. And I think if you do 2 or 3 units, you're not going to get into a lot of building issues. For example, if you were building something, if you were renovating something, at least in our area, you get to a certain number of units, a certain size building, as you know, you're going to need a fire system.
Yeah. Yeah.
Right, sprinkler system.
Let me get into a couple of specific questions about the cell tower.
Yeah.
Was the cell tower in the steeple?
Yeah, it's hidden. You can't
You don't even know it.
It's what do they call it? A bell tower.
Yeah. Yeah.
So it's round and it's got vertical posts holding it. So there's some type of a device behind each one of those posts. So you can stand on the ground and can't see anything.
Okay, so now, you said that, you have the fee simple interest, but here's the thing. You have the building, you own the church. You sell the lease to another party. And that lease has already been recorded down at the registry, right? Because it's like a 50-year lease, you think? Is that what they say?
Yeah.
So what happens if
renewable? Yeah,
but what happens if the building burns down? What happens if the seller decides he wants to demolish it? And what rights or what protections does the person that actually owns the cell tower now have if they don't have the fee simple interest in the property?
Well, they have an easement to that cell tower.
Okay.
They can cancel their lease at any time if they want. And if the building does burn down, they can cancel their lease, stop paying, and go find a new tower. However, if you think about it, if you're at all aware, it's not easy to get a license to put a cell tower in
Yeah.
reception is good. In other words, on a high object or something. In fact, in this similar nearby community, town is up in arms because someone wants to put a cell tower on top of the water tank for the community, which is at the highest point. And the townspeople are rallying against it because someone lives near there, and they don't like the visual pollution, or they are concerned about potential radio waves, maybe. I'm not really sure, but
Yeah. Now, let me ask you, how does the money work on a tower? I've often wondered this, like, are some towers more valuable than other towers because of the traffic that hits the tower? Is that how they're valued?
I honestly don't know. I imagine that, well, I can say this, they're valued based on how much money comes in every month.
Right.
As far as how they value what they want to pay, I'm not privy to that. I don't know that information yet.
Oh, okay.
Yet, because it's been a learning experience for me too.
Yeah.
Just doing one 10 years ago didn't really
Yeah.
give me enough to become an expert. And believe me, I don't consider myself an expert on cell towers, other than getting to be an expert in looking for them,
Yeah.
looking for real estate for sale with cell towers on it.
Yeah.
And there's a couple of things that you have to be aware of when you sell a cell tower. They have to be able to have 7-day a week, 24-hour access to it. They typically require a small area for their computer stuff and, electronic equipment. Now, that doesn't mean it's manned, but it's just a small room, maybe 10 by 10 is the one we have. It's on the second floor.
Yeah.
They can walk in the church, up the stairs, and climb the ladder and go up there all they want. But I do have to give them access 24 hours a day. So when I do sell this fee simple interest, there's always going to have to be, and of course the church is conducive to that anyway, just the way churches are generally laid out.
Right.
Walk in the front door, there's stairs going up on the left, on the right, to a little mezzanine area, and from there you get up into the steeple. So it's pretty easy to give them access to their location to work. But you do have, as the fee simple owner of the property, you do have that obligation, just as you have an obligation to keep the building insured against fire,
Right.
Hazard, and they also maintain their own policy.
Okay.
Again, I'm not an expert on insurance, but I made sure that we insured the church. In my mind, it was going to be enough to rebuild the church so that we could put the cell tower back up.
Yeah. Yeah. Okay. So let me just understand how this deal came to you. It was an old-time client. He was getting a little overextended on some of the deals he was doing. And he said, I found this great deal. Hey, DJ, you should go check it out.
Right. Yeah. And he's in my partnership group.
Okay, good. All right. That's so cool.
Yeah. Right. Most of the people that I deal with, I've dealt with before for years.
Yeah.
That's how it came about. So he profited also.
Oh, good, good. That's excellent.
Profiting. And hopefully we'll continue when I sell it. Be simple. But
why? How did you tie him into the deal to protect his interests?
Well, I basically raised my money from private investors.
Yeah.
Not private. I mean, we use plenty of our own money too, but over the years, I've raised money from private investors. And that's what I do. So he got some money and I, part of the group.
Yeah. Okay. So that's the other thing that you do is hard money lending as well, DJ.
Yeah, I do hard money lending, and I buy distressed debt from, banks and financial institutions.
Okay, stop right there. That is the real reason why I wanted you on my call. I wanted to talk to you about buying distressed debt from banks because, it's going to start to pick up, isn't it?
Well, I think it is.
Yeah. Yeah. Where were you back in 2008, 2007, 2008. How did you take advantage of that? Or did you get your ass handed to you like some of us did?
Right. Good question. I'm glad to say, I'm able to say that I survived with good credit and no disasters, no major disasters. I mean, yeah, I had some properties that I took back under foreclosure back, when
As a hard money lender.
as a hard money lender. That's right. I started hard money lending about 2000 in 2000. Prior to that, I had been in the seller carryback business. I'm sorry. I was purchasing seller carryback loans, seller financing.
Yeah.
And I was doing that since 1989, really. Buying seller carrybacks, not to regress, but as the 90s came along, something called a subprime lender came into being.
Yep.
Late 90s. And that was, for me, that was a time of low rates for most everybody. And they would you check your pulse. Do you have a pulse? Yeah, okay, you can get a low loan. But what that did for someone in the seller carryback business at that point in time, we were accustomed to buying loans at 7, 8, 9, 10% rates. All of those rates and all of that real estate got paid off as you moved into those low rate periods. Why would people be paying 7 and 8 if they could refinance their house and get a 4% loan?
Right.
Well, the portfolio that I had built up in the 90s, which now was about 18 million bucks, started to run off, so to speak, because of the low rates. So I said to myself, well, it doesn't look like I can generate as much seller carryback loans as I used to. And I have by that time I had raised money from investors in addition to our own funds. And so I got into hard money lending around 2000. And over a long time, over probably 5 or 6 years, I lent $50 million.
Okay, so are you more on the lending side? You're more acting like a bank all through those years, or were you doing some real estate investing as well?
Yeah, I was doing some real estate investing as well. Multiple things, buying a few properties, but mostly I was doing hard money loans, dealing with a couple of the foreclosures that I had. But in looking back with it, it was fortunate that I came out with my shirt. I came out with good credit. And prior to that, I had raised about $6 million from just a handful of investors. And, most of them are still with me today. So that's good.
Great. Excellent.
Kind of gearing up, thinking that we're going to have a new onflow of distressed institutional debt. And I went to the seminar to meet contacts who were the special asset folks, so that I could access some of their debt from their institutions at a discount.
Now, you've been doing this for years, so you know exactly what to say to these guys. You know what you're looking for. Somebody that's never done it before, do they just start knocking on doors at banks saying, can I speak to the workout officer?
That's it. It's really basic. It's pretty simple. It's not easy to execute, but it's simple to say. Start calling the special assets. Who handles your workouts? Who's the credit manager, senior credit officer? Find somebody in the bank that handles that. And
now, I don't know if you were there. The conference that I met you at is the second one I went to. The first one was out in Chicago. I don't know if you were there for the Chicago one.
I wasn't.
Yeah, well, you're a very wise man. Who the hell would go to Chicago in March or something? Yeah. But the thing that was said there that I thought was really interesting, when they had all the workout officers up on a panel, they said, well, who do you choose to sell to? Or, who's your best customer? And the guy said something that really threw everybody for a loop. He says, I want to sell to the farmer next door. And we said, what do you mean the farmer next door? He says, if I take back a farm, I want to sell that farm, get it off my books, and I want to sell it to the farmer next door to that farm, because that guy knows the value of the property and he knows how to operate it. And I'm not going to see that property again if I sell it to him. And so that's what he said. When I'm out there looking at it, I want to see somebody that knows what they're doing, that knows the industry of the property that I've taken back, and that I can give it to them. I know I'm never going to see that property again, because I live in this community and people know I had to take that property back. And I don't want them seeing, another boarded up building because I screwed up on the loan. That's what they said. That's what this guy said. That was very interesting. So what do you think?
I just think that you've got to look at each asset on an individual basis.
Yeah.
And I think that the financial institutions, they want to lay it off as painlessly as they can.
Yeah.
And that's what they try to do. I mean, when I talk to, bankers, I try to explain to them that we're not going to waste their time, that, we have a certain range that we're looking, a certain type of product that we're looking for that maybe they have, maybe they don't. In my case, I'm right at the moment, I'm looking for commercial loans in the $500,000 to $5 million range. That's
Okay.
kind of sweet spot, million to 4 million is really the sweet spot, but we'll go down to 500 to 5 million. And we're typically looking for sub-performing loans. I'm speaking for myself, of course, because, and most of us don't want to own the real estate. If we're in this business, we just want the payments. So whereas a bank is push it all the way to foreclosure, if there's a sub-performing loan, you can typically work out a restructured payment transaction with the debtor. And that's what we attempt to do.
Okay.
I think that from a financial institution standpoint, most of the people just want to be assured that you know what you're doing and that you can perform.
Yeah. Yeah.
And I mean, I can go in and I can say, well, I've did this and I've done that and these, and somebody asks you for proof, I suppose you can give them proof, but
Yeah.
as long as you're reasonably credible. And the fact of the matter is, I would not discourage anyone from calling financial institutions, because at the other end of the line, they're all employees and they're trying to do what the boss said. And if he said, let's sell these loans, they're going to put you on that list and send you some information to allow you to call them back and get into whether or not it's something you can perform on.
Yeah.
It suits you.
Now, when you look at these loans, or when you tell the bank your elevator speech, you're looking for $500,000 to $5 million loans on a commercial real estate. Is there some formula that you use to value it the same way that you did with the cell tower, some cash flow, or do you discount it because it's a workout and this guy's better off having it off of his books so you can really get in there and steal the deal?
Well, first of all, you have to think about your cost of money, right? So you've got to get a certain return. So it only takes a calculator. It only takes a calculator to to figure out what your yield would be.
Yeah.
So figure out price, but you really, if it's a non-performing loan, you're looking at the value of the real estate, and all of the problems that might be attached to it. Are there title issues? Are there lien issues? You'll generally have to foreclose or structure some type of a workout or modification. And, what I see in the marketplace today is some of these loans being sold for 40, 50, 60 cents on the dollar.
Yeah.
One is an individual case. We try to make offers any opportunity we get, because if you don't make an offer, you'll never know, you know?
Exactly.
Say, oh, gee, they won't take this offer. You never know what they're going to take.
Right.
They've written down the cost of their asset or not. You know, that's why a lot of folks go and look at look to identify the distressed debt, the distressed banks, which banks are in trouble.
Yeah.
Looking at their FDIC reports and seeing who's holding what, what collateral, second mortgages, home equity lines, residential, construction loans. You know, what are they holding and what's delinquent, what's a classified loan, and different criteria that the FDIC has. So you can pretty much isolate a number of banks that have financial issues, that threatens their capital.
Yeah.
And the trick, of course, is that you've got to find them. So when you find one that's, oh, look at this bank, it's got all these delinquent loans and their capital is very small, you'd think that would be the best candidate, but it might not be, because they don't have enough capital to absorb that hit that you're going to give them. If they took it, they'd be closed down. So they still have to have enough capital to be able to take that hit, right?
Yeah.
So you kind of got to look long and hard for the financial institutions. But it's been my experience that once you establish a rapport with the party on the other end of the line, and if you ever do anything or come close to it, they either recognize that, hey, you're responsive, or, hey, he gave us an offer, it didn't work for us, but, we know he's qualified and alive, let's get a hold of him again.
Yeah.
Nah.
Now, how many, what, go ahead. I'm sorry. Go ahead, DJ.
I was just going to say that's what led me to this. I mentioned the word bankruptcy when you and I first.
Yes.
That's what got me into this other transaction that I'm closing on the 30th of March next week. And it was because I had dealt with credit union before. I had bought 3 mobile home park notes from a bank in Connecticut, and I bought the 3 mobile home park notes, and 5 years later they called me back and said, hey, we got this note in bankruptcy, and we got 2 in bankruptcy, or one just got out of bankruptcy, one's in bankruptcy, and would you be interested in? Well, yeah, I'm interested. Because I've been involved in bankruptcies before, and I have a little bit of an idea about, what the ramifications are, what the opportunities and pitfalls are of those.
Yeah.
It's not plain vanilla. It's not for the faint of heart. It's not simple. I wouldn't recommend it for a beginner.
Yeah.
But, the first thing I did was I got a good bankruptcy counsel.
Yeah. Yeah.
Good the deal and discussed it, etc. But I've had several occasions to deal with Chapter 11 bankruptcies, which is a reorganization bankruptcy, on larger projects. And, those worked out okay for me because there was equity in the deals. They weren't underwater.
Yeah.
And
DJ, how'd you get started? Like, where'd you come from? Were you always down the Cape, or are you
I'm originally from Connecticut, but my folks always had a place on the Cape.
Yeah.
And I'm fortunate I spent my summers up here. And my mother was self-employed, and she encouraged me to get into real estate. So I was 18. So I got my real estate license when I was 18. And I sold real estate as I went through college. And a quick thing that I figured out was that when I took people out, and the first house I showed was 14,900. It was a new house down here.
Wait, on the Cape?
On the Cape.
Okay.
1968.
Yeah.
Right? And in any event, because I was 18, older folks, the folks that I was selling houses to, looked at me as if I was their grandson.
Yeah.
So I had credibility and I had trust. If I didn't know something technical, when I went back to the office with the people, my boss could tell them any technical, oh yeah, about the closing or about some detail about the purchase and sale agreement. But people trusted me because I was young. They knew I would be truthful.
Yeah.
The other thing I found out was that for me, I was in college at the time. The best thing, one of the greatest things is that in those days, I don't know if they still do it, they probably do, the listing agent got a commission even if you didn't sell it.
Yeah.
So I was doing a lot of listings on the Cape that at that point in time, it was just starting to develop in my mind, and there was subdivisions for sale. So I listed a lot of property. And as I was in school in the winter, I would get these 10% checks representing my listing fee when someone sold one of my listing lots or houses.
That's great.
I try to encourage young people to get into the real estate business, even if they don't stay in that business. Because ultimately I got out of it after a few years.
Oh, really? Okay.
Because I was 18. I was looking for something more adventuresome than
Yeah.
real estate. And what really got me though was people would come along and the wife would say, oh, I like this. Oh, the bathroom, I don't like the color of the bathroom, or I don't like this. Damn, you can paint it. You can read. Excellent investment. I'm telling you, this is a wonderful location. And I got frustrated with that kind of an attitude from consumers. So I went off and did something else for 10 years.
What was that? What'd you do?
Well, I was an adventuresome, and I lived up on the Cape and I lived on a pond. So my folks were very forward thinking, and they bought me a scuba tank when I was 12. So I started scuba diving when I was 12. The short story was I became a commercial deep sea diver, and I did underwater construction all along the East Coast and Mexico. I used to work on oil rigs drilling for oil. And most of the work I did was, deep water in the Gulf of Mexico, commercial diving,
See, that's so cool.
water. And,
Hey, let me just throw out a name here. I just want to see if this name, a realtor down in down the Cape, if you know this person, Carrie Matheson. Does it?
I don't.
Okay, all right, just checking. Actually, when I use that name, you never know whether it's going to be a good thing or a bad thing. But
No, I don't. But I don't come in contact with a lot of realtors.
yeah, exactly.
That house selling mode.
Yeah.
I do. I mean, I sell houses every once in a while, but they're usually ours.
Yeah.
Something that we've fixed up, that kind of thing.
So, tell me, what's the next step for you, DJ? Like you're getting ready for what is probably going to be, a repeat in one way or another of 2008. Are you sticking right around here in the Massachusetts area? Or are you going to go far afield and look for deals all over, or just sticking in New England?
Well, the commercial debt we look for on a nationwide basis.
Okay.
And, I typically, maybe 4, 5, 6 deals a year on that we can find. And those we hang on to in service the debt, right? On behalf of our investors. We're not going to buy and flip that or anything like that. And it's just the debt. So for me, what I'm looking to do is to build up our portfolio again. We've had a lot of runoff on it, and we're all looking for new deals and new money.
Very cool.
That's the plan, whether it be residential loans. I like to buy in New England, but I used to buy them all across the country. So I'm just waiting to see really what comes down. And we're starting to bid on some residential and commercial product as best we can.
Yeah.
Hopefully it'll show up this time.
Well, hold on. I'm going to show you a picture before we hang up. I can do this quickly. They showed me how to do it. I'm in the same boat you are. No, that's not what I want. All photos here, filter, favorites, done. All right, here we go. This is my plane that I fly out of Marshfield.
Uh-huh.
All right. And I love flying all over the Cape. So if you see my plane up there,
Yeah.
that's me. That'll be me.
Good.
Yep.
Now, you're living in Duxbury, right?
Yeah, I'm selling the house in Duxbury, gonna move up to New Hampshire. But
Uh-huh.
yeah, I'm originally from New Hampshire, but I raised my kids down in Duxbury. So yeah, but I keep the plane in Marshfield.
Uh-huh.
Yeah.
Good.
So
Good.
yeah. So wait. Now tell me again, what town are you in?
I'm in Eastham on the lower.
Oh, okay. So yeah, so I'd fly into Chatham or I'd fly into Providence.
Right.
Yeah, okay. Yeah.
Or Provincetown.
Yeah. I don't like Chatham. I love the restaurant there, but I don't like flying into Chatham. Those winds, they can
Uh-huh.
turn on you in no time flat.
Right.
Yeah, very tricky, very tricky.
Yeah.
Yeah. So, well, DJ, thank you so much for being on my show. I'm glad I met you. Let's stay in touch because if you're going to be my bankruptcy workout guy, and my listeners here, will hear it, and hopefully they'll tap you on the shoulder, and I'll make sure we put your email on the show notes, and if people come across something, they can just give you a buzz.
Yeah. Happy to talk to them.
That'd
Happy
be
to help
great.
out.
That's awesome. Thanks, DJ. It was good
Oh,
talking.
you bet. Have a good one. Thanks.
take care.
See ya. Bye-bye.
Bye.